Are the ghosts of past interest rates haunting you or paralyzing you from buying your next home? If you bought a couple of years ago, your interest rate is likely under 4%, could even be 3%, or maybe sub 2. And you're like, wow, how could I possibly ever even think about letting go of that interest rate? I want to challenge you to think a little bit different with regard to the reality of interest rates and average interest rates over time. So are interest rates higher today than they were in 2020, 2021? Yeah, they are. But if you have a life situation or you're just wanting to move and you're letting the interest rate kind of hold you back, I have a potential solution. And that is a little house hack. What about thinking, instead of selling that house that has a 2 or a 3 or a 4% interest rate, what about creating an asset that now has cash flow, meaning that you keep that property and now you rent it out. With an interest rate at 3% on that house, it's highly likely that you are going to cash flow if you now rent out that property. You can take the positive cash flow of that rental situation to offset the higher interest rate on the new purchase of the home. And keep in mind that interest rate, it's a point in time. Yes, it's a 30-year fixed rate. Yes, you're protected with future rate increases. However, if interest rates do come down, and it's likely they will, interest rates are cyclical, just like the mortgage markets are cyclical, just like most business cycles are cyclical. So when interest rates come down, you can always refinance if you're in a position to do so. But right now, people are so paralyzed with all of the negativity that's coming into our heads. Take a deep breath. If you want to move, if you currently own a home, think about renting it out. Get with a professional that can give you average rents for the neighborhood, because we know this. We build wealth in this country primarily through owning real estate. And so if you can go buy that next property while you've retained your existing property and now it turns into a rental and now you're cash flowing and it's going to grow and appreciate over time very likely. And again, when we think about appreciation, appreciation is that number that says, if I bought the house for $500,000 in a year from now or 2 years from now, appreciation is the percentage of growth of the value of that home over time. So appreciation goes all over the board. It could be 0%, it could be a -%, but on average in our country, we are currently seeing a 6.3% average appreciation rate for real estate, residential real estate across the country. Now, your particular area could be more, could be less. But let's think about that. On a $500,000 house, 6% appreciation is $30,000 a year. That means in 5 years, technically, I'm now going to have $150,000 in equity. Well, you could sell the house that has that equity, use that money for a down payment, go buy the next house, or you could leverage the equity to use as the down payment with an equity line of credit, let's say, and then you can rent out that property. Be sure you're talking to educated people that really understand market dynamics, your real estate professional, your lending professional, your trusted resources that you can call on and say, hey, I'm thinking about this. What would it look like? Maybe it makes sense, maybe it doesn't, but it's worth a conversation. You owe it to yourself to explore all of your options. Click the links below to schedule a personalized consultation with a KellyZtilowGroup mortgage advisor and let us help you reach your real estate goals. The path to building wealth is through homeownership. Thank you so much for watching, and don't forget to subscribe to this channel for more valuable mortgage education.